What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online. As usual, you can see this is a Mogul Property Day. This is their latest launch. I believe it's already live on their website. Maybe not, but this was a VIP launch, I think 2 days ago at this point. It is a short-term rental in the Poconos. It's the Poconos Mountains region of Pennsylvania. I think actually, is it just in Pennsylvania? Yeah. This is a very popular vacation spot for people in Philadelphia, people in New York, people throughout New Jersey. I don't know. I haven't really talked about this that much, but I used to live in New Jersey, both North and South Jersey at different times when worked in Philadelphia, worked in New York City, and would commute. So both of those. Oh, what am I doing here? Clicking on stuff that I'm not trying to. Let's see. Oh, I see what I did. I clicked on this thing and it popped it up. Okay, so what is this? So it's a very popular short-term rental destination. I actually have a lot of friends that would vacation there. A couple people I know own short-term rentals there and have done well with them. I feel like they didn't get quite as much attention during the boom times as some other markets. It's not like the Pigeon Forge area where you just heard it all over the internet, or Joshua Tree. I feel like those were the two really I would refer to those as meme markets, right? Like it was just because it was just a crazy amount of people investing in short-term rentals there. The Poconos, I think, a similar type of vacation market, but I don't know, for whatever reason, I didn't see the same level of coverage on a lot of the real estate investing websites. So, I don't know why I'm even really mentioning that, other than I think that they didn't have the same crazy amount of inflated values as some other places. And it seems to me that they're still doing well, where some of those other ones maybe not as much. I think that they somehow resisted having a crazy amount of supply built. I'm not really sure how that is. Maybe, I don't know. Anyway, they said, okay, we've had $320,000 in revenue over the last 12 months at 79% occupancy. This is something I did look at the AirDNA to, I'm always trying to verify this stuff. I found the property, it only had $211,000 in annual revenue. AirDNA doesn't pick up every booking site, and they're showing that it was only 271 days available. Oftentimes, I found other listings for this site on stuff that I know AirDNA doesn't pick up. So I think what happens is, the other 90 plus or minus days that this was not available, it was because it was booked on some other platform and taken down. So the availability got marked down. AirDNA thinks it could, the revenue potential is 292. Maybe they just, I don't know. I've at this point, I really have come to just trust what Mogul says. If they say, okay, no, we have evidence of $320,000 in trailing revenue, those two numbers are not so far off that I would have a problem with it. And so, okay, let's actually look at purchase price, $1.825 million. What did I say? $320,000 in revenue. I like to always do this, 1,825. So 17.5%. I'm usually shooting for 20% revenue to price ratio. 17.5 is very good for a operating asset. Normally when I'm saying I'm shooting for 20, that's when we're looking for properties here in town. So it's prior to spending the budget on furniture, fixers, and equipment. So when I have one that's up and running and I have trailing, revenue, and it's at 17.5, I actually think this is a good deal. I mean, that from that numbers perspective. Which reminds me, first, please like and subscribe. In the description to this video, I have links to all the places where I currently invest in fractional real estate online, including Mogul. Mogul does have a referral link that'll give you some money if you use it. But do your own due diligence on all those platforms. or any of those platforms that you click on, and also on any of the properties you see me talking about. Just because I say, something's a good deal, or I like this, or there's something, doesn't mean it's the right thing for you. When I'm doing these videos, a lot of times it's just the beginning of my due diligence. This one we do, I think we'll have a long time. It's not supposed to close until January, and the total offering amount is $857,000. So I think this is going to be a longer raise. A lot of the ones that were bigger like this, they didn't sell out super quick. I'm sure we'll have time to dig into these. And also, hopefully we'll have some real good discussion in the Discord about it. Like, we have had this quite a bit. And what Discord am I talking about? If you click on the description, or in the description to this video, there's a link to the Discord I have set up. Especially if you're someone who's recently gotten kicked out of other Discords, like Lofty has started kicking some people out lately. You feel free to jump into mine. It's the place where we talk about all sorts of fractional real estate online. Any platform, as long as you're respectful and you're not trying to scam people or anything like that, not spamming. Jump in there, talk to us about what you think about this property, what you think about any of the properties out there. That's what that's for. So anyway, again, do your own due diligence. I think I already said that, but I just like to really reiterate that, especially when I have nice things to say about a property or a platform. So this was listed on the MLS. They're getting it for 8.5% below the list price. Does that mean a whole lot? Not to me. Sellers can list something at any price. Although I did notice, oh no, that's the buyer's agent. Never mind. Let's see. What else did I want to say about what they had to say? Oh yeah, 6 bedrooms, 3 bathrooms, 150 feet of water frontage, which is really nice, and it makes it, you can see it's really a creek, I believe. But let's see. So it looks like this is the creek. This is where the address shows up, but I think this might actually be the property. I'm not sure. When I looked at the flood map, it puts it on here instead of there. Keep this in mind. We'll hear a little bit about this later, but this is a bridge going across the little creek. Let's see, what else did I want to tell you about this? So they give you your numbers. Okay, year one yield, lower than we've seen on some of the others, 7.8%. Average yield over hold period, 12, again lower. IRR, again lower, okay? Lower than what we've come to expect from Mogul. It's lower than their average deal. One thing that they recently added to their website is this strategy. They're calling this a core property. You have core plus, value add. When I used to work in commercial real estate, we actually broke things down into 4 categories: core plus, value add, and opportunistic. Opportunistic was like ground up or really distressed properties. Core in the commercial space was, at the time, people thought, central business district office properties with long-term leases in major cities. I think that, because what it represented was what is the least risky asset class. Now, obviously, because of a lot of things that have happened in the last 20 years, that's changed quite a bit. Also, long-term single-tenant, triple-net properties with investment-grade tenants. That's another thing. People would think of that as core. Representing very low risk. And so, they're saying, okay, this is minimal risk, and also talking about your, so because it's in lower risk, you would be willing to accept lower returns. I'm just not sure that I believe you can pick a short-term rental anywhere and call it core. I mean, and maybe they're just taking these relative to the other deals that they're having, that they have on their platform. So maybe they're thinking this is a much lower risk short-term rental than some of their others. I'm not really sure how they get there. I think this is an interesting way to look at things. If you look at I'm going to tell you sort of how we looked at it in commercial, and then you can just sort of shift that into, okay, what do we, so core plus is really stable asset, but maybe there's some of it. So again, if you had that central business district office property and you had mostly long-term tenants, but you had one tenant that was going to roll over that you knew that was way under market. So you knew you were going to get some, there was some upside there. Or sometimes one of the things that was really popular quite a while ago was, okay, buy that core property, but you knew you had the ability to add cell towers to the top of it, or some other way to increase income. So that was core plus, right? You expected a little bit higher returns, but usually, like especially with tenant rollover, usually there's going to be a little bit more risk to it. And then your value add, a lot of times you'd have some sort of renovation. You'd have maybe a repositioning of the property, as far as starting to appeal to different tenants and whatnot. You see value add a lot in the multifamily space, where people will buy, a kind of rundown property. One of the things that was popular for a long time was just buy older properties, just update the kitchens and baths and maybe some of the common areas, charge higher rents, cycle through all of your tenants. And there's more risk because you have to actually make that all happen, but then you'd get higher return. So I like that they're sort of outlining this, but it's going to be interesting to see like where things fall along this line. They did show the Pinkman as value add, which I think makes a lot of sense. That's one where, part of that deal was getting the seller to renovate it for us. But it'll be interesting to look at, how things, because it's hard for me to think this is a core. I mean, I get it. It's a vacation market that has been around for, I don't even know. I don't know. For a very long time. I don't think there's any reason it's going to go away. And that's what, they talk a lot about the Poconos. There's 20 million living within 20 million people live within a 2-hour drive. That's because you've got Philadelphia and New York City and a bunch of New Jersey. And so it's a place that you just expect to do well for a very long time, but it is a short-term rental. I'm not worried at all about the city saying you can't use this as short-term rentals anymore, because that's why that whole region exists. But in a recession, is it gonna perform as well as some other properties? Maybe not. Well, and so one of the things though too is I'm a strong believer in short-term rentals that are in driving markets, right? That are in markets that most of the people that go there are driving there, not flying, because you see less of a decrease in demand in those markets when you do have recessions. So there's a lot of reasons to think, okay, maybe this is lower risk than some short-term rentals, but it is. I think it's just hard for me to get there to think of this as a core product. And part of that might just be my bias in the way that I learned real estate, 20 plus years ago at this point. And one of the things that's funny is whenever I search these, and I'm sure it's because it's just like indexed in my search results, but I actually wrote a blog post about this in like 2011 or something, explaining those different types of core. I think I talked about it on the channel even. I'm not sure. Anyway, that's as much as I want to talk about that. But so it is lower than average yields from them, but they're saying, hey, it's a lower risk deal. Whether or not you believe that, it's going to be up to you. Let's jump into some of the things real quick that we always look at. Flood map doesn't look good, right? This looks like it is squarely in the AE flood zone, and this is why I was talking about the which building is it actually? Because I think when I look here, this building, which is the one with the thing on, with the little thing on it, the pin. Man, it is late. I should have done this earlier. But this doesn't show up in that floodplain when we look at it. But I think this is just like a garage or something, because when we look at the pictures, it really looks like we're right down there by the water. Is there another? Oh, are we not going to? Yeah, there we go. Yeah, see, I believe that we're really just right here by the creek, and I think this might be, I don't know if that's the other building. I'm not sure. Yeah, but this picture here, right, makes it really clear that we're right by the creek. So I believe that we're in a floodplain. A lot of people are going to be like, well, if you want to have that nice, water view, you're going to have to be in the floodplain. Well, it doesn't look like this guy does, right? Like they're built just a little further back. So yeah, that's a risk. You guys know how I feel about it. I really don't want to be in an AE flood zone. I think, it is really just a matter of time before you have to deal with a flood. And yes, you get flood insurance, and I'm sure that's built into their projections. They expect that, but it's just, I don't like it. If that's a level of risk that you're comfortable with and you really like this asset, otherwise, I can understand. Especially like in certain markets where you're like beachfront properties and a riverfront and whatnot, you're just going to be in a flood zone, but or most of the time. But again, I mean, most of this property is not. But yeah, that's something that I just always want to avoid, if at all possible. If this was just an otherwise amazing deal, I might be willing to do it. But like this is one of the things that says, is this really a core deal? Like this, we have flood risk here. We don't have in a lot of other assets. I don't know. In my mind, it doesn't seem like it. But maybe, I think I think it is debatable, right? The flood or the crime map looks like there's absolutely no crime in the area. Part of it is I think it's sparsely populated. It's a vacation area. Also, whenever I see stuff that is this limited, it always makes me wonder, are we just having a reporting problem, right? Is it like spot crime not actually picking that up? So if anybody's done any research on crime in this area, please put it in the Discord. Love to hear more about that. Yeah, I looked up Zillow home price trends in the area. It has gone down the last year, just a little bit. It's a little bit better chart, though, than we've seen in a lot of markets. They had this little peak, but then we're actually up above where we were in 2022. So this was the peak in a lot of markets. And there's a lot of places that aren't back to here. But, it looks like we've trended up pretty well. Zillow thinks prices are going to go up another 3.8%. What did they estimate in here? It was 3. Okay, so their growth rate they're using, at least in, I think they use this over the whole term. Zillow thinks it's going to do a little bit better than that the first year. So that's nice. So let's see, get rid of that. I already showed you the AirDNA. One of the things, there weren't a whole lot, this AirDNA thinks 211 here. Right? We talked about, though I think it's just not picking up all their bookings because they say they have, past bookings up to 320. I did find one other one that was somewhat similar size, a little bit bigger, that it had 340 in revenue showing up. This is obviously like it is a asset that is, let's look at the last 5 years and see what that looks like. Oh, that's a big move up. That's interesting. Maybe this is when it was put into service, right? So they hadn't been estimating for it before then. I don't know, but yeah, a lot of seasonality here, obviously, but it looks somewhat stable, right? And this is the occupancy. I think we have the same thing for, I thought I had that same chart for, I feel like AirDNA changes on me. Oh yeah, just right here. Daily rate, revenue. Let's look at the revenue. Oh, okay, so we did have a spike. And yeah, it's kind of a lot of up and down. Doesn't look terrible though, right? I don't think there's a clear trend up or down on this one, so that's interesting. Let's see. I think I'm going to close this tab because we're not looking at, I don't think I need to look at anything else in that email. As always, I recommend opening every single one of these pictures because when you do that, you can see the full view. You're not just getting a little piece of it. They do have mini splits throughout this, which I think is what it makes sense because it was an older property. It was retrofitted. I'm a fan of mini splits from a as the hosts of short-term rentals, we do pay for the heating and cooling and electricity and all that thing. And, so you have a more efficient system oftentimes when you have mini splits, because you're not heating or cooling the whole house. You get to pick whatever area somebody's in. They can adjust that. So let's see, that is like that. Obviously, I mean, it's a really nice looking property. Great looking, the kitchen is, it's very high end. And so I think that could be part of where they're coming from with this being a core property, right? It is a luxury vacation rental. Obviously, it's a ton of money that it's bringing in revenue wise. 6 bedrooms, 3 bathrooms, 4,600 square feet. So it's huge too. Oh, but then, I mean, I didn't even get mentioned. So we've got a giant heated indoor pool. One of the things that they say it's always heated, but if you're not happy with the amount of heat, it can be heated more for $50 a day. That's something I noticed in the Airbnb listing, which I thought was kind of interesting. But when I was looking at the reviews, there was quite a few, nobody was very negative on it, but there were quite a few 4-star reviews, and there were a couple things that people complained about. And one that was complained about over and over again was the shallowest part of this pool is 6 feet deep. That's tough if if you're a family with kids, or really, anybody who's not just a really serious swimmer, you either have to be on a floaty or you're treading water that whole time, right? Like that's a very deep, shallow end of a pool. So there's not a whole lot of, you're not doing a lot of the type of playing that maybe most people are used to doing in a pool where you can stand up in it. That struck me as really odd. It obviously was something a lot of people weren't happy about. I have seen in the past pools like that where they built a platform to make a little shallow section. I don't know if that's viable or even an issue, but because it was mentioned multiple times as one of the concerns, I could see that. Like if I wasn't really careful in reading the description and I'm just like, yeah, bringing my kid to the pool, and then it turns out, okay, there's not a shallow end for him to hang out in. I really just have to, I don't know. It does seem a little bit problematic to me. And then I mentioned this earlier, where we have this here. There's some complaints about it being noisy when cars drive over this, and I guess from the master bedroom you can hear cars driving across this bridge. Apparently, it woke some people up. But that's really it. There wasn't a whole lot of negative stuff. But yeah, where the pool is like the biggest amenity in this property, it's just really strange to me that there isn't a actual shallow end. There's maybe one that's shallower than normal, but 6 feet is it's just very strange. And the other thing too is some of the sleeping spaces are these lofts. There's definitely people that don't like this setup. There's a lot of people that think it's cool, and enjoy it, but it is just something to keep in mind. What else? And I think one of the things that I thought is there's some real potential to do a better job. Like, this is a really lazy first picture this is the current Airbnb listing. So I think there's the opportunity to do better than this, right? Like, this is not a curated, it's just like, okay, we've got random stuff hanging out in the pool. We've got stuff on the, this isn't the first picture that I'd want in my Airbnb listing. This is okay, but I think that you're just not, I think you could, this is such a better picture than that first one, so I think there's some potential. I was looking at the host for this, and the person's only hosting a few properties. They are a super host and they have a lot of great reviews, but I think that this property could probably be marketed better than it is. So I think, that's always good to see. And some of these are okay, but I think there's just the property itself, it just seems like could have so much, such better marketing, the better, this is a nearby amenity, and this isn't just my video being blurry. This picture is blurry in the listing. I mean, this just, I wouldn't even add this picture in, right? Like, I mean, this is like, it doesn't, this is probably the least attractive picture of this property that I found anywhere. And then these are, again, other nearby things. But, so I think there's probably some upside to having just a professional manager, better pictures, maybe upgrading or changing out some of the furniture and decor. One of the things, and I don't know if this is just an oversight, but I was looking at the contract, and normally they're asking for all of the personal property. But in this contract, let's see where we are. It looked like, oh, did I miss it? Yeah. At no additional cost, washer, dryer, projector screen, and refrigerator. That strikes me as odd. Usually they're saying like all the personal property, right? Like, are we not getting the beds and other furniture? I didn't see somewhere else, and maybe I just missed it in the contract, but I didn't see anywhere else where the furniture, fixtures, and equipment were listed. Maybe they're going to do a separate bill of sale. I don't know. I didn't see any note about that. So I think that's kind of problematic, one, from an expense point of view, but maybe they think, okay, we are going to really upgrade the look of this place. I don't know. I don't think it's terrible, but I think you could give it a little bit, I think some of the rooms could do for a little bit of a makeover. Maybe more, continuity. I mean, each one looks like a little bit, I don't know, but definitely the pictures for each could be better. So we'll see. I mean, that's one of my thoughts. It was just strange to see that. Speaking of the contract, I did see an appraisal contingency, their regular inspections and all that. One of the things that they're asking for is a CO from the city, certificate of occupancy. That's one thing. So I was licensed in Pennsylvania for a little while, also in New Jersey. Both of those markets are so much different from a lot of the other ones that I'm in, where you are getting like a CO inspection from the city prior to closing, and that's something that the seller's responsible to do. Yeah. Seller to provide clear CO with this is the township. So that was interesting to see. I hadn't seen that in a while. Let's see what else about this property. Talked about the listings, talked about the Poconos a little bit. I didn't really look at like population trends because that's not what we're doing here, right? The value here comes from the it being a desirable vacation market, not from people wanting to move here for some reason. So population trends aren't really the driver of value. Speaking of value, we'll look at that in just a minute, but I wanted to see how much is this refinancing really affecting our total returns. Oh, gets us down to 11s. Let's put that back. Yeah, so I mean, not a huge difference, but it is, even more so. We've talked about quite a bit. I think it's pretty reasonable to assume a refinance sometime in the next 5 years. I just don't like doing it, and I don't think that they normally need to. I mean, this is a deal. Well, okay, well, now we're getting down to 11. It's even, just a pretty low return deal that, if I really thought of this as a core property of a very low risk deal, I could see that. It's just hard for me to get behind that. Maybe part of why they think that is they think they're buying it under value. It reduces your risk a lot. Oh yeah, speaking of value, let's look at okay, so the Zestimate on this one is 1.945300. That, which is, we're getting it under contract for less than that. But if you see, okay, this is the Zestimate over time, which this looks like it was sold for much less, but but maybe it was renovated. I don't know. I mean, I wonder if we could find that last listing. If anybody's found that prior listing, I think that'd be interesting to take a look at. Is this, yeah, 477. Oh, what? No, that's to report it. I was thinking you could, I don't know. Anyway, that's a huge move up from what they bought it for just 3 years ago. Now, I don't know. Maybe it was fully renovated. I'm not really sure. It does always worry me when you see like, okay, this estimate is so low, and then it popped way up. Well, what happened? This is when there was it listed for sale. So Zillow's kind of being affected by the fact that there was a listing. It was listed for $2 million initially. Was it actually? I don't know. Or they're rounding. Homes.com's doing the same thing, right? It was valued much, much lower, and then, bam, now we're valuing it way up here. Their average value is 1.8, so they think we're paying a tiny bit over. One of the ones they use, though, says it's worth way more. One says less. Okay. And then Realtor, same thing, right? Okay, we've got this pop. So, I mean, that's what's weird about these third-party sites. Like, I don't know why they're taking into account what it was listed for, but I think it's really clear that's what's happening here. I mean, I don't think there's something else that just made all these sites at the same time think it's worth significantly more. Is that when it was listed? Let's see, August of this year. How long has this been on Zillow? Usually it tells us, 109 days. Yeah, that tracks, I think. I think when this was listed, all of a sudden, all three of these platforms thought it was worth way more than they thought before. I'm just not sure. I'm not sure how that happens. Maybe did the square footage change? I don't know. I guess that's something we could look up. If anybody's looked that up, go ahead and put that in the comments or in the Discord. That'd be interesting to see. But so, yeah, all the third-party sites make me think that we're doing fine with the valuation, but they all have that really big pop, and that is just kind of weird, right? Like, because somebody listed it for that much, why is that pulling the value up so much? Is it because this is a market where they don't have access to actual sales? I think that's possible. I don't know. If anybody has some insight into that, I'd be really interested to know what's going on there. Let's see. It is this guy who's listing it, Michael Klein. If you go, his website is like Poconos.str.com. So he's clearly, listing and selling, like this is his bread and butter business. It also, the website mentioned that he owns some of his own. So a couple things there. One, I think probably means that he's got a good sense of what it should be worth, right? So sometimes that's helpful. But also, too, he owns some of his own but is not buying this one. Well, maybe it's because it's a real big price tag, but it's just something to think about, right? The professional in that area saw this one, didn't buy it. But, like that's true of a lot of properties that I sell here in town. I can't buy every single good deal. So it's not always the biggest negative, but it's something I do think a little bit about whenever I notice that. Let's see what else. So, okay. Oh, and then we also have the appraisal contingency in the contract. Oh, did I close the contract already? I did. But there is an appraisal contingency in there. It was at the sale price, so it says, it's got to appraise for the sale price, or we can object and back out. And we have seen now that sometimes we'll have a low appraisal and not get a full reduction, or maybe, sometimes we'll get only a partial reduction. Sometimes we'll get no reduction, but still move forward. If, the guys at Mogul are able to figure out a way to do that, like by increasing the loan amount where it doesn't hurt the IRR. So, they said if it would have hurt the IRR, then there'd be a vote. So, I mean, it gives us protection, but it makes me want to be even more diligent on figuring out what do I think about the value here. I didn't actually pull up the comps, and one of the things too is about a property like this property is so hard to value, right? Like how anytime you have these in markets where you have in the mountains, you'll have some that'll have better, significantly better views than others. When you have ones that are near the water, your water access comes into play. There are just so many things that make one property so much different from another. And then, throw in, we have this huge amenity and then, an indoor in-ground pool. They also, I didn't even see a picture of it, but they also have a covered hot tub somewhere outside, I think they said. Oh, I think this is it. I think that's it over there. They have good outdoor space, but again, I think there's a lot more they could do with their outdoor space as well. So it does strike me as maybe there's some upside, and if looking at the way it's managed. Oh yeah, it had mentions a 1930s build, right? I thought that's being a very old property like that. Obviously, it's been renovated. I didn't see any mention of when that renovation actually happened. I'd really like to hear that it's the current owners that renovated it, and that's why we have a, 3.5x, roughly almost 4x increase in price from the last time, or maybe not, maybe even more than, I don't know, somewhere around there, somewhere around 4x. Increase in price, like that always makes me a little bit nervous. Why are we paying so much more? Yes, we've got some yield. However, it is lower yield than most of their other deals. Let me see if there's anything else. Oh, yeah, I did find the Booking.com website. Thought that was interesting. Like the Booking.com, first picture. This is the one that I'd rather have, right, than the Airbnb one. I thought that was interesting. But even this one, I think they could have. I think they're using all the same pictures, just in a different order. Oh, maybe not. They've added some other ones. Nice frozen water picture. A little bit of good picture of that through the snow. So anyway, I think that it is. Again, I think there's a little upside in making their listings look just a tiny bit better. But it is interesting. Sometimes you'll see stuff like that. It just depends on how well they're actually doing compared to the demand in the market. But sometimes we'll see a new set of pictures in a tweaking a listing have a huge difference in your revenue. And so I don't know. I think that it really looks like an opportunity there to me. Let's see, close those. That is the Airbnb listing. Was there something else I wanted to talk about with this? I don't think so. I think it was just how deep the pool was. That's just a weird. It's just strange to me. I don't know why that is. So let's see. Get rid of that. AirDNA. We talked about it. Not a ton of comps that were coming anywhere near what we were seeing, but you have some, and so that plus the trailing makes me feel pretty good about it. Looked at the Google Maps. I'm going to zoom out on this just so you can see the whole. Let's get rid of this thing. See, like, really where this lines up relative to. Okay, you got New York City here. We were over here somewhere, and you got Philly. So yeah, both of those relatively. Let's zoom back in, see if we can. Like that's why this is such a popular spot, right? Because you just have millions of people in this area, all that can all go there relatively easily. All right, let's see. Get rid of the Poconos. Anything else? So in general, am I going to invest in this one? We've got a lower than average yield. Now they're saying, okay, it's because this is a lower risk, but it's in a flood zone. We've got this weird pool issue, which is the only real complaint that I saw over and over again. How big of a deal is that? I don't really know. I think you'll stop getting negative reviews from it if you have, you make it much more clear in the listing. Does it create more liability, right? I don't know. I think no, but I don't know. That's one of the things to think about anytime you have pools, but obviously that's part of what their insurance was for. Great looking crime map. It's a market I'd really like to be in, right? Like I think the Poconos, it is, it's been a very long-term vacation rental market. Like, long before Airbnb existed, people were doing short-term rentals in the Poconos. So from that sense, I can see it, I can think about it being lower risk. Anything else? It looks like they're estimating below the trailing numbers based on what they've told us. We don't exactly see that looking at AirDNA, but it's close enough that I believe it. Maybe there's some upside in changing the marketing. But yeah, I'm just not really excited about it. The biggest thing for me is I hate flood zones. And I want to get compensated a little bit more for being in that, experiencing that risk. I just, I haven't done a ton of flood claims in my life, but I don't enjoy it. I know I wouldn't be doing it with the fractional stuff, which is what got me over the hump for some of the ones, that were in just the shaded X. But AE, I mean, that, it just makes me think you're just going to experience a flood at some point. We could just get real lucky and we don't have one during our hold period. But again, it's also going to be a deterrent for the next buyer. Although you see me flip-flopping a lot on this issue, right? Because it is, I want to be real close to the water. So, and the other thing I didn't mention too is this is it's got a septic tank, and in the contract it mentioned it was like a grinder and pump septic tank, but it also said there's public sewer. So I thought that was kind of interesting. It's something that just is an extra hassle and can turn into a big expense especially if you have guests that are flushing stuff that they shouldn't and whatnot. But it is, it's something that with the right maintenance and everything, it's not a huge deal, but I'd prefer not to have properties on septic. But in a market like this, I don't think you're going to get away from it. It's I don't know. I thought it was a little bit strange that there was a sewer. Sewer was also checked on the contract. So, because normally you have a septic tank because you don't have access to a sewer system. So I'm not really sure what's going on there. But it's I wanted to mention it because I know there are some people that really hate investing in properties with septic. I grew up in an area where that's what everybody had. So I think to me it seems maybe that makes it not seem so terrible, and it just seems like a normal, a normal type of thing that you could have with a property, and then but yeah, one more thing that makes it, I don't love that, right? I don't love having it. I'd rather not, but I think that you're not gonna really get away from that in this market. Okay. I know I'm now in full-on ramble mode. It's 5:20 a.m. and I haven't been to bed yet, so I'm just going to wrap this up here. Let me know what you think. Are you going to buy a piece of this one? I just don't think I am. I don't know that I really believe this fits, the core model. It would be great for them to explain why this is core, versus what are the main factors that have moved it into here. Like, obviously, yes, it has the lower return, but you can, if you have a high risk thing and a lower return, I don't know, returns coming mostly from your rental income. Well, okay. That is, a factor, right? You're getting it. It's when you have your yield providing most of your return that, you're not betting on appreciation. So, okay. But minimal risk. Why is this a less risky deal than the downtown Houston short-term rentals, or the ones on the lake in Houston, or or I don't know, maybe I'll have to go back and see if some of those got labeled core as well. But yeah, for me, it's not such an obvious low risk deal that I want to just accept a lower return than what I'm able to get on some of their other properties. Anyway, that's it for me for today. Until next time, I'm going to keep making mistakes so that you don't have to.